What's up, guys? This is Prime Flex, and based on popular demand, I've decided to make a part two of the volatility index strategy. And in this video, I'll be teaching you guys how to set your stop loss and how to set your take profits, how to maximize your profits, and how to protect your capital, because that is the major aim of an investor: protecting your capital and then maximizing your profits. All right. So in this video, I'll just go. I'll do a run through of how the strategy works, and if you want to get an in-depth video of how the strategy really works, then you should check out the part one of the video, which is in the link. The link is in the description box below. Okay, so let me just get to the video, guys, so I don't have to waste much of your time. Okay. So this strategy right here is what I call the trend following strategy, the volatility index trend following strategy. Okay, it follows the trend. It rarely happens, but because you are going to be trading, it works on all volatility index. It gives you more leverage and more opportunity to check out. So a signal is for sure going to show twice in all volatility index strategies. So you are going to get at least 2 trades a day, and those are going to be 2 winning trades for sure a day. And with the way I'm going to teach you how to set your stop loss and how to take profits and how to set your take profits, you are going to be maximizing your profits and protecting your capital at all costs. Okay, so let me get to the video, guys. So how does the strategy works? You can see right here we have this indicators here, and we're going to be fully using the indicators, and we have an indicator on the chart as well. The indicator on the chart is the 200 moving average, while the indicator below comprises of the MACD, the moving average, and the Bollinger Band. Okay, so the strategy simply states that once there's a crossover of the MACD below the what I call the bottom of the Bollinger Band in an uptrend, then you are going to be taking a buy. Okay, so you can see right here, this is an uptrend because the market is above the moving average. Okay, the moving average, 200 moving average, and you can see right here we have a cross at the rock bottom of the Bollinger Band, while the candles are still above the 200 moving average. Okay, that is the simple definition of the entry. Okay, you have the market, you have the indicator crash down below the Bollinger Band, the last line of the Bollinger Band, and then you have the candles above as well. Okay, you have the candles above the 200 moving average, which is showing you that we are going to be in an uptrend. That is the simple definition. Now, how do you take your entry? You take your entry once you realize that the crossover is very, very glaring. You can see right here, the crossover hasn't even shown really well at all. Right here, the crossover hasn't shown really well. It is right at this point that the crossover was, it gave a clear crossover. You can see right here at this point it gave a clear crossover. As you can see, you can see the point, the place I'm pointing at. Okay, so how do you take your entry? For me, this is how I take my entry. First of all, I want to protect my capital. That should be the aim of every investor. I want to protect my capital first of all. When I am sure that my capital is protected, then I can decide to start thinking of how to make profits. So first of all, you should always set your stop loss once you take your entry. Always set your stop loss once you take your what? Once you take your entry. So I would have gotten in right here at this point. Let me delete that and show you again. So the clear crossover was after this green candle here. So would have been going in at this red candle right here, right? At this red candle right here. So let me show you. Let me use a box. So this would have been my entry. Now my stop loss is going to be below the low of the market, the last low I can recognize in the market. That is going to be my stop loss. This is the last low of the market. This is going to be my stop loss. Now, what is going to be my take profit? For me, this is what I do, okay? When using this strategy, first of all, I will go for a 1-to-1 risk to reward ratio. 1-to-1 risk to reward ratio. That means the same amount of pips or points that I'm risking for my capital protection is the same amount of points I will risk to maximize my profits. So for a one-to-one risk to reward ratio, I think it would be around here. If I'm very very sure of that, I think it would be around there. Now, after getting a one-to-one risk to reward ratio, after getting a one-to-one risk to reward ratio, I will move my stop loss to my what? Above my entry. I will move my stop loss above my entry. Once I move my stop loss above my entry, so let's say this is going to be my stop loss. I'll move my stop loss to this point right here. And then once I see that the market is beginning to get closer to the eye of the market, the previous eye I can recognize in the market, I'm going to what? I'm going to secure my entry. Once market gets to that eye, I'm going to secure my entry at a one-to-one risk to reward ratio. That means first of all, I have protected my capital, and then I have been able to secure my profits. I protected my capital first, then I'll secure entry. I'll secure profits next. Right here now, the market might decide to just keep on going, and as the market is eating every eyes of the market, this would have been the next eye. If the market has gone to this eye, if the market has gone as far as eating this eye, I would have moved my stop loss to this point right here. I would have moved my stop loss to this point right here, this point. And that is how I would have continued going and maximizing my profit and securing profits after I am very sure at first that my capital has been protected. I think you guys are getting me. I think you are getting me. I hope you are getting me. I just hope you are following. So that is the simple way of how I secure my capital and maximize my profits. Okay, let me show you one example on volatility index 50. Let me show you. Let me see if I can see one more example on volatility index 50. All right. Okay, I think this is an example right here. Yes, this is an example right here. You can see right here. After the market made a rejection, two rejections. The market made two rejections. After the market made those two rejections, then there was a cross below the what? There was a cross below the MACD. You can see the cross right here. It happened at this green candle right here. This one right here. You can see where I cycled, and this would have been our entry. Okay, it's happened at that point, and this would have been my entry. I hope you can see it, guys. Then what will I be doing? This is my entry. This green candle here is my entry. Anywhere in between is my entry, right? Now, my stop loss is the last low I can recognize in the market. What is the last low I can recognize in the market? The last low I can recognize in the market is this point, where the rejection happened. What will I be going for? A one-to-one risk to reward ratio. After I've set my stop loss, this would have been my one-to-one, or even more than one-to-one. Let's say this would have been my one-to-one risk to reward ratio. That means the same amount of pips I'm risking for my stop loss is the same amount I'll be risking for my take profits. If you don't know how to do this, you can just Google volatility index lots pips calculator, so you can really go about this quickly. Okay, because I can't begin to explain how volatility index pips calculation works. It is going to take a whole lot of time, and I don't want to waste your time on this video. Okay, so you can see the first thing I've done is I took my entry here. I secured my capital here. So in case the market goes back to eat my stop loss, I have secured my capital. I'm not taking a whole lot of loss. I'm not trying to believe on hope that the market is going to go up, and then I just see the market continue going down. I don't live on hope here. I am investing. And if I want to invest, I want to make sure I'm losing the barest minimum, and I'm targeting my as I'm losing the barest minimum, I am trying as much as possible to also make profits on what I am risking. Okay, so my entry is here, my stop loss is here. This is my one-to-one. Once market hits my one-to-one, what do? I move my stop loss to my Once market hits my 1-to-1, I move my stop loss above my what? Above my entry. Then what do I target next? I target the next high of the market. This is the next high of the market. I hope you can see what I'm doing, guys. Once I see that market has hit the what? The next high. Once market hits this high of the market, I move my what? Sorry for that. I move my stop loss to what? To my 1-to-1, above my 1-to-1. And once I see the market has broken and has given a clear indication that it might continue upside after market has broken the current high, I'm going to just move my stop loss to what? To this point. Once I see the market has gotten to this point here, this is the point I'm talking about. Once I see the market has started breaking after ranging here and it has broken up and it is trying to go up, I would have secured my entry at this point right here. This point. This black line is representing my stop loss. I would have secured my entry right there. And I wouldn't even care if the market kept on going up or it's my stop loss, because I have been able to secure as much as 1 to 3. 1 to 3. 1 to 3 of my this is what I have risked when I started. This is the little thing I have risked, and this is what I have this is the profit I've been able to get. I hope you guys get that. Okay, I hope you guys get that. And that is the video you guys have been waiting for, and I've been able to deliver on this video. And I think this is another one right here, because you can see that the crossover happened, and this would have been a very, very massive profitable one, because you can see that it's happened when the market was above the entry. The market has is the barest minimum of the low, the last low of the Bollinger Band, and you can see your entry would have been right here, and then your stop loss would have been right here. Sorry for that. Your stop loss would have been right below here. You would have gone for your 1-to-1, which would have been around here, and then once the 1-to-1 would have been our high. So once the market breaks that, you move your stop loss. You keep on moving your stop loss. First, you move your stop loss to this area. Once market breaks, you move your stop loss to this area. And as market is progressing, you are following closely with your not really too closely. Okay, you are just following with your stop loss to maximize your profit and to secure your capital, to secure your investments. Okay, so that is how trading goes, guys. It is not really much of a of what many people try to make it look like. Okay, trading is all about capital protection. This is for a downtrend right here. You can see the market is the market is below the below the 200 moving average. This is the 200 moving average, and the market is below the 200 moving average. This would have been where we have our as you can see right here, we have our entry right here, this right here, and would have where would I have entered? Sorry for that. I would have entered right here after the close of the of this big red candle. Where would have my stop loss would have been? My stop loss would have been a little bit above the above the eye, the last eye I can recognize. My 1-to-1 would have been where? This would have been my 1-to-1. And once I see the market has hit my 1-to-1, I will be targeting the next low of the market. Okay. Once I see the market has broken the next low, I'll move my stop loss to where? I'll move my stop loss right here. Once market breaks the next low, I'll keep on moving my stop loss until market hits my stop loss, and I know I have taken the maximum profit I can take off the market. Okay, that is the video I promised you guys, and I've been able to deliver this video. Thank you for watching this video. If you want to watch if you want to see the indicator settings and everything, the link to the video is in the description box below. Okay, so thank you guys for watching this video. PrimeFlex says bye.